But, and we were just talking about this, Treasury yields at the highs of the year, dollar at the high of the year, those two things have acted as headwinds for stocks in the past.
Yes, I mean, that's been a foil for markets to an extent. To me, I think yields, even at around 5%, still aren't really that damaging to markets because that means you're paying 20 times for a 10-year bond. And in some ways, I think, it's not clear why yields have been rising. It could be inflation. It could be the robust economy. It could be markets concerned about, the incoming administration's policies around tariffs, et cetera. So it is something I'm watching, but I don't think it's a foil even at 5%.
Tom Lee is bullish on the stock market in 2025, expecting gains fueled by reduced Federal Reserve and inflation concerns, post-election clarity, and renewed corporate confidence driving mergers and investments. He notes significant cash on the sidelines ready to boost equities. While higher Treasury yields and a strong dollar have been headwinds, Lee believes they won't significantly harm markets. He highlights the U.S.'s dominance in technology and healthcare, with American companies well-positioned amid global challenges. Lee expects a shift in market focus to company earnings, with Nvidia continuing to lead in AI despite slower growth. He anticipates opportunities in sectors with strong earnings potential as the AI-driven business cycle matures.
You've been right on the direction of the market for a long time now. Tom, do you think the gains continue?
Yes, I think that there's a lot more tailwinds building for markets in 2025 than have existed in 2024, mainly because, now we're not worrying about the Fed, worrying about inflation and bringing a halt to the economy. We have an election that's behind us, and now we have a lot of cash on the sidelines, and I think companies finally having more courage and what I think we'd call animal spirits and a willingness to start to do mergers and other things that, like capital markets, that actually help stocks next year.
Good stuff. Taking us into the 2025 trade there, Tom. Palantir versus Nvidia. Let's start with Nvidia. What do you think? I mean, the growth is obviously going to slow down.
Yep.
But the valuation's fairly reasonable considering kind of where the broad market's at and where other stuff is at too.
Yeah, and you have to take a look at it. Probably going to see a little bit of a reset into the end of 2024, into 2025. We've already started to see that at the beginning of December. Should take that into consideration, the correction territory that it's in. And you've got a lot of the other Mag 7 names that are, starting to get valuations that are actually above Nvidia. And we haven't seen any pullback expectations from some of the major tech players for their products. So I looked at something that gives me a little bit of duration in this one going into 2025. If you think it's going to rebound, and I picked a couple of strikes that are near at the money at the current rate, around 130, 129 or so, where you think it's going to go higher. But then you're offsetting some of the costs on that bullish position because the farther you go out, and I'm going out to February monthly option series, so a couple months till expiration from the end of the year to give myself that duration. But what that means is you're going to have an extrinsic option premium in calls that you buy that might be at the money. So you want to offset some of those costs. So I looked at a basic call vertical here where I'm going to take advantage of maybe a move higher in the stock, but capping my gains because I can offset some of my risk on that position. Buying the February 130 call, selling the February 145 strike call. That's still below those all-time highs that we saw at the end of November, above 152. So it's managed and conservative here, but still taking that bullish directional bias. $15 wide bullish call vertical here. You're paying roughly about a $570 debit for it if the stock's trading around 129, 130 at that point. So nearly 1/3 the width of the bullish call vertical here. Pay $570, your break even is going to be $135.70 to the upside. That's only about 5% above $129, $130. So you don't need a massive move to the upside on this one to profit. You're going to avoid that earnings that comes in at the end of February also, so that might be key. But you're going to capture some upside here over the next couple months.
All right, like that. So also you don't need like a massive move. for Nvidia to break out. You just needed to firm back up, kind of drift to the top of the range early next year. For Palantir, obviously, it feels like you got to take a, I mean, you don't have to take a different approach, but you can because the volatility is very much more so present.
Yep, and if you look at the commercial side of their business, which is really growing, they're really involved in the government side. That's still creating a bunch of revenue, but the commercial side's really starting to pick it up, and that's why you saw those over 300% gains in 2024 for Palantir based on their growth expectations, right? Even though valuations might be getting stretched. Same kind of concept here in Palantir that I used for Nvidia. The key difference is Palantir reports earnings in early February. I want to avoid that while still taking advantage of, if you think this thing's going to rally into that report and you can avoid that event risk, this type of strategy takes advantage of it. Using that same bull call vertical here, where I'm going to buy something around the 70 strike, and the January 31st weekly options. So you've got just over a month till expiration in these. Buy the 70 call, sell the 85 strike call, which would be a new all-time high for Palantir.
Tom, first off, Happy New Year. Good to have you on. How much is the rest of the world's problems benefiting the United States? Sarah kind of alluded to it at the top, which is this is the place to be. The reality is the United States is the greatest economy in the world. The entire German DAX, their Dow Jones Industrial Average, you add up all the biggest companies in Germany, you total them all together, they are not as big as just Apple or Nvidia by itself. How much has Europe's woes, China's woes, how much has that benefited the U.S. economy, benefited the U.S. stock market, if at all?
It's hard to link causality. I mean, for a long time, as you know, outside the U.S., most of the rest of the world is small and mid-cap stocks. I think 95% of all listed stocks outside the U.S. are small and mid-caps. And I think it's the U.S. has really seen companies make the bets in the right places. U.S. dominates technology, healthcare, and financials. Those have really been the strongest industries and the ones that benefit from technology, and the U.S. edge is enormous, right? I mean, outside the U.S., are there thousands or dozens of great technology companies? There really aren't. So I think in 2025, however, if industrials start to do better, then I think Europe and Asia start to outperform. But I think if it's a tech-led market, it's really going to be U.S.
James, it seems like Nvidia was obviously still our number one, but in terms of return, Palantir and a few others zoomed ahead. Who do you crown as the AI winner of 2024?
Wow, Oliver, it's a good question, and I would say Nvidia for just the massive amount of demand that's been there for their products. But on a stock performance basis, as we know, Palantir just got up and just took over and really like a turbocharger past them in stock performance. And I think that says a lot about that Nvidia's growth. A lot of it from the hyperscalers is maybe behind it, and Palantir's growth may be ahead of it in 25.
24% growth, basically 25% for the year for Palantir. Nvidia, obviously a huge growth story, but one that did peak out earlier in the year. We're looking at still, though, doubling revenues on an annual basis. So I guess there's got to be at least some kind of floor in Nvidia. How bad could the stock get when it still is seeing so much demand?
Well, this is the beginning of an AI tech-led business cycle bull market, and there's a lot of room for Nvidia to continue to have great revenue. Probably not quite what it has been, but we think Nvidia will continue to do better than indexes. It's pole position for the semi business. But again, the market's going to rotate to where earnings going to be best in going forward, and that's that second derivative: the Palantirs, the ServiceNows, the Oracles, certainly software, telecom, and then of course getting into other sectors as well.
Seems like Nvidia pretty reasonable at 40 times earnings, James. Not bad.
Yeah, they've had an ability to continue to report earnings that keeps that PE sort of grounded. And I would suggest that, in 25, they trade more on their earnings, as the rest of the market probably does. Companies are going to trade more on earnings, not the Fed, because I think they're out of the way. So if Nvidia's growing at 30 to 40% a year, you can look at the stock price having that kind of return. Not, certainly not what it was in 24, but certainly much better than indexes.
Yeah. James, thanks for the thoughts. As always, appreciate it.
Tom Lee remains optimistic about the stock market in 2025, citing reduced concerns over inflation, the Federal Reserve, and post-election uncertainty. He highlights sidelined cash, renewed corporate confidence, and U.S. dominance in tech, healthcare, and finance as key drivers. While high Treasury yields and a strong dollar pose challenges, he believes they won't derail growth. Companies like Nvidia and Palantir are positioned to thrive, with Nvidia maintaining its leadership in semiconductors and Palantir seeing rapid commercial growth alongside government contract. Looking ahead, Lee expects markets to focus more on earnings, with opportunities in AI, software, telecom, and industrial sectors. Strategies targeting pre-earnings momentum, like call verticals for Nvidia and Palantir, reflect confidence in their continued outperformance. Overall, 2025 could mark a dynamic, earnings-driven year for equities. Will 2025's market growth be driven by tech, or will other sectors take the lead? Which AI-driven companies do you think will dominate in the coming year?